What is happening, Bulls and Bears? Back with another dose of economic reality. It is Sunday, August 14th, 2022. Doing this video today from the comfort of the indoors as it's in the 90s here in my neck of the woods here in California. Now, many people think that California is always the perfect weather. Well, on the coast, it's very nice. Inland, it is nice, but in the summer, it can get very scorching. And I'm about, I'd say, 15 miles inland, so not really near the ocean. But one thing that is nice, it's only about a 20, depending on traffic, 20, 25-minute drive to the coast from where I live. But let's get into it. This is the beginning of the economic endgame. Now, people often ask, JJ, there's going to be a crash. You said everything was crashing. Where's the crash? Why hasn't it happened? Folks, this is a slow motion collapse. And actually, people that were shorting the markets here because they heard this talk about recessions all over, they're talking about it on the news. Even financial news media is talking about that. They're saying the R word. Of course, they try to change the definition, but at least they are talking about it by bringing different people on, asking them if there isn't or is a recession. Now, the officials are still denying it. Remember, they changed the definition. It used to be 2 consecutive quarters of GDP growth. That was kind of the standard going along for decades. Now, this year, 2022, they're pointing to the low unemployment number to tell everybody, I hope people don't believe it, but to try to tell everybody or convince everybody that there is not a recession. So with all the talk of recession, regardless of whether they're admitting it or not, just the talk of it, it had a lot of people shorting the market, and bears got smashed. And many bears got smashed so hard it may even look something like this. What are we talking about when we say bears? We're talking about people that shorted the markets, including the stock market. They got hurt really, really bad. Let's take a look. The stock market over the past 30 days had one of the biggest runs in over 2 years. And this is why I've tried to warn people, no matter how bad things look, when you think it's the end, it could always be manipulated. This is a manipulated market. And the people that lost money or are down right now on their trading, it seems like by now they would understand that. But a lot of people don't follow just financial news. They follow mainstream financial news, but not the type of financial news that you get here from this channel. And I think those were the people that tended to lose a lot of money here in this recent rally by shorting the markets when they should not have been shorting. Markets never go straight up or straight down. Doesn't move in a straight line like that. You see dips and rallies along the way. And I think this is a rally in a bear market, but people shorting this market got crushed. Let's bring up a chart right here. And we'll just look at the Dow Jones. Other major indexes followed similar suit. But just the Dow Jones over the past month had a big run up. In fact, the biggest run up in about 2 years when you look at it just in a 30-day time frame. And the funny thing about it is the optimism in the markets was blamed on or pointed to as being inflation being less than expected or inflation slowing. But we talked about this a few reports ago. Inflation slowing is not necessarily good news for consumers. It means our prices are too high because they are too high to begin with, and they're still going higher. It just means they're not going high as fast. So inflation slowing really isn't a good thing, but of course, the markets reacted in a bullish manner and wiped out a lot of people that were shorting the markets. I've read a lot of stories about people shorting and losing loads of money. Now, with all of the manipulation out there, the trillions of dollars in liquidity that some of these trading houses and hedge funds have available to move markets, people sometimes ask me, and I see this down in comments quite often and get a lot of emails on this, how did I know when the housing market was going to come down? For those of you that have been on this channel for the past 3.5 years, I think that's about when I started, I kept saying housing's going up, housing's going up, housing's going up. Why? Because mortgage rates were at historic lows. It was pretty simple. 2020 came and went. We had some volatility, but markets were ultimately rescued. We're talking about the stock market, but I'm going to go into housing here in just a minute. In 2020, though, for example, the housing market went up like a rocket the stock market crashed. You actually could call that a crash. So it had the biggest crash in history, but also had the biggest recovery in history. And at the same time, we saw debt levels explode in the past 2 years like never before. So does anyone think it's a coincidence that we saw the biggest drop followed by the biggest market recovery combined with record levels of money printing? You see what's going on here? So the recovery never would have happened as it did without the record levels of money printing. Now combine that with all the rescue programs, we knew housing wasn't going to go down in 2020, even though a lot of people predicted it. So how did I predict it this time? Well, I didn't think that they would bring in a bunch of new rescue programs again unless some new health crisis rolled out. I thought that was going to be kind of against the odds, but it was simple as looking at debt levels and mortgage rates combined with inflation, right? People that bought homes in the past couple years at these prices that are way beyond the 2008 housing bubble peak, these people are hurting with the cost of living, utilities, energy, even things like their taxes, their grocery bills. It's all squeezing these homeowners. And a lot of them use their home as an ATM machine, refinance, cash out to help pay their bills, to help pay off debt. Well, that can only last so long. But all those three things together, the rising rates, the end of the rescue programs, the inflation, equals what I said was going to be the second half of 2022. And here we are. Home prices are now starting to come down. But let's take a look at a chart of mortgage rates, and you can see exactly the time frame that I was looking at. And we'll bring up a chart here of the 30-year fixed mortgage rate, and this is a 5-year chart, and we see at the beginning of 2022 the rapid increase started to occur in mortgage rates. In fact, they nearly doubled when you look at the 3%, actually lower than 3% in 2021, but at 3% up to 6% at one point. Now, of course, they dropped a bit since then, but it was obvious with looking at what was happening with mortgage rates and also what the money guys were telling us, the people that create the money, they were telling us they're going to raise rates. And just the talk of rates going up can put a lot of fear into people, and combine that with everything else that was happening, of course, the rising prices, the cost of living, the end of the rescue program. And in fact, it wasn't the end of the rescue program. There's still about over 400,000 homes in mortgage forbearance. Believe it or not, we talked about that just in our previous housing report. But with the end of most of the rescue programs, it was a combination of those things that led us to believe that housing was going to start coming down just when it did, just in the second half of 2022. So while it's difficult to predict a manipulated market, there's certain assets that can't be pushed up and down price-wise in a fast manner. Stocks, they can be pushed up and down. You can see a massive crash and a massive recovery in a matter of months, just like we saw in 2020. Housing, not so much. It takes rather a much longer time to play out. And that's why even though rates started going up in January, we knew it was going to be a few months to play out. And I think we're just at the beginning. I think later this year, we're going to start seeing some real big price drops in the housing market. We're already seeing them in some cities right now. When you look at the recent sales prices just for the past 1 to 2 months, cities like San Francisco, Las Vegas starting to come down, but to see noticeable declines nationwide, we're going to have to wait for this to play out. But many more cities are going to go negative in home prices as we go into the end of 2022. And we'll want to wrap up today's report with something that I read here over at a website called International Man. And we're going to read some of the script and try to paraphrase some of this here, but this is the financial or the economic endgame that we're headed into. The economic endgame is here. We're still in the early innings. People think when I say that everything is going to crash tomorrow. No, this could take a long time to play out. Would it be surprised if I saw the rug pull in the next week? No. Would I be surprised if I saw the rug pull in the next 2 years or 2 years from now? No, I wouldn't be surprised, because this can happen whenever the deciders, whenever the money guys decide to pull the plug. Here's an example. If we quit creating currency or printing money today, everything would crash. Everything would crash. So all they would have to do is stop doing what they have been doing over the past many decades, and especially since the financial crisis, all the money creation since then, they would just have to stop doing that for everything to come down, and that would be the rug pull. But here's how they laid it out over at International Man, and I'll link to the article down below. Here goes. When politicians carelessly spend and print money measured in trillions, you are in dangerous territory. And that is precisely what the Fed and the central banks have been doing, enabling the US government to do it also. From the start of the health crisis hysteria until today, the Fed has printed more money than it has for the entire existence of the US. For example, from its founding, the US took 227 years to create the first $6 trillion. Think about that, 227 years to create the first $6 trillion. But in just a matter of months recently, the government printed more than $6 trillion. During that period, the US money supply increased by a whopping 41%. In short, the Fed's actions amounted to the biggest monetary explosion that has ever occurred in the US. In short, the US government is fast approaching the financial endgame. It needs to raise interest rates to combat out of control inflation, but can't raise them too rapidly because it would cause bankruptcy. In other words, it's game over. They have no choice but to reset the system. We've been hearing a lot about the reset, haven't we? No choice but to reset the system. That's what the governments do when they are trapped. Think of it like this. Imagine a spoiled child playing a board game, and rather than admit he's losing, he flips the board. That is what governments will do now that they're financially checkmated. They can't win, even in their own rigged game, and now are left with the choice of losing power or flipping the board. Since power does not relinquish itself voluntarily, we should presume that they will choose to flip the board. So folks, will you be prepared when they flip the board? I think the board flip is coming. Can't predict exactly when. That's why I say keep stacking, because when it flips, you want to be ready for it. And I think ultimately, hard assets, especially silver, is going to be the reward at the end of this journey. But it's a long-term game. You may even see prices go down in the meantime. What do I look at it as? Buying opportunities. So hope everybody is understanding this. Please let me know what you think down in comments about the financial endgame approaching. What are you doing to prepare? And what do you think about the time frames, the housing market, the stock market crushing a lot of bears that shorted the market? I'd like to hear from you on this down in comments. Everybody, thanks for watching. Bye for now. Peace.